So let me just start out by saying it's so great to be here in Austin. I got a chance to see the mayor, and I know all of you, like me, are enjoying our time here in this great city, but it's also especially great to be here at CoinDesk, and I appreciate the invitation so I can talk a little bit about how the Treasury Department and the Biden administration are approaching the digital asset landscape and the role of regulation in promoting the innovation that all of you are so interested in. For those of you who don't know me, I spend a great deal of my time working on issues at the intersection of national security and economic policy, on issues like sanctions, illicit finance, and investment security. Two particular issues that I spent a great deal of time on over the last several months are Afghanistan and Russia. And each of them, respectively, demonstrates the risks and promise of digital assets, why certain forms of regulation are urgently needed, but also the value that new ways of making payments could have in reducing costs and creating opportunities for billions of people around the world. Let me start out by talking a little bit about Russia, where the Biden administration and our allies around the world are taking steps to support Ukraine as they defend themselves against Russia's brutal invasion. Our sanctions have played a central role in our effort to starve the Kremlin of revenues and degrade their ability to project power. And though cryptocurrencies to date have not been used as a major avenue to evade our sanctions, we know that Russia is otherwise a hub for cyber criminals that use cryptocurrencies and other forms of currency in furtherance of their crimes. Treasury is already taking action on this front. For example, in April, Treasury imposed sanctions on Hydra, the world's largest darknet market, which operates out of Russia, and Garantex, a virtual currency exchange that also operates out of Russia and caters to illicit actors. Analysis of Garantex transactions indicates more than $100 million in transactions associated with illicit actors and darknet markets. What stands out about these entities is that their role in financing and facilitating criminal activities was well known by so many people, even before they were subject to our sanctions. In too many cases, some investors and firms in the crypto ecosystem were willing to look the other way when jurisdictions like Russia offer a haven to criminals abusing digital assets. On the other hand, I've spent a great deal of my time seeking to mitigate the humanitarian crisis in Afghanistan. Part of the problem in Afghanistan is that few companies, especially financial institutions, want to do business in a place that recently experienced a government overthrow and where the Taliban has repeatedly gone backwards on its commitments, especially to women's rights. As a result, Afghanistan's economy has fallen into a crisis, with little ability for citizens and businesses to get access to financial resources they need. Many local banks are at risk of failure. Humanitarian organizations are struggling to bring funds into the country to pay for their operations, and ordinary Afghans cannot access the cash needed to pay for their basic needs. Just imagine what a frictionless global digital payment system with appropriate controls for illicit finance could do for people in places like Afghanistan. If relatives abroad could easily send remittances, or if NGOs could pay their staff halfway around the world with a click of a button on a smartphone, this is one of several problems that digital assets can help to remedy. But it's critical that we balance both the risks and opportunities that digital assets present. And I believe that when it comes down to it, we as policymakers and you as investors, builders, and innovators in digital assets really want four things. One is we want to foster innovations that bring better technology and better financial services to consumers and businesses, especially those who have traditionally been left behind. Two, we want to provide appropriate consumer and investor protections. Three, we want to ensure that financial stability. And fourth and finally, we want to root out crime, fraud, and other abuse from the financial system we collectively depend on. Some of these goals may require legislation or government action. Terra USD and Luna's collapse reinforces this need, including for legislation to address the risk presented by stablecoin. And we're currently working across the Treasury Department and the broader Biden administration to answer the questions posed by the President's executive order on digital assets. In many cases, through proactive self-regulation, we can solve many of these problems. Let me be clear. When digital asset companies and exchanges allow bad actors to remain a part of their ecosystem, or take advantage of vulnerable consumers, they risk harming the reputation of your firms and your industry. And they heighten the impetus for strict regulation. In response to Russia's further invasion of Ukraine, many of the world's leading companies acted early to cut off their ties with bad actors, even before they were required to do so, because it was the right decision for their businesses. I encourage you to take the same approach when it comes to illicit finance, to be proactive in identifying risks and isolating bad actors from the digital asset ecosystem. Of course, we know that while some illicit actors are flagrant in their disregard for the law, others may not be as easy to identify. At Treasury, we view as one of our primary regulatory goals to help ensure that financial institutions understand red flags from potential illicit activity and can make informed determinations about who to do business with. We're also working closely with our foreign allies and partners, especially through the Financial Action Task Force, to work toward implementation of international standards when it comes to illicit finance rules for digital assets. We view you and your institutions as our partners in these efforts, both in taking the actions needed to implement rules and sanctions, but also in helping to develop the technologies we use to collect and analyze information underlying them. In the spirit of partnership, I want to share with you the focuses of our regulatory efforts over the next several months. First, we're focused on the travel rule compliance in the cryptocurrency sector. As you know, the travel rule requires that information is collected about who, that is, the real-life person, not an online persona, is sending and receiving funds, and that this information is transmitted to all financial institutions involved in a payment. This information helps us enforce Bank Secrecy Act and safeguard our national security. While travel rule compliance creates additional reporting needs for some digital asset companies, we know that many of you are already doing this. This information is critical to our ability to defend America's national security. We know too well the role that cryptocurrencies can play in the financial activities of our adversaries. Second, we're working to address the unique risk associated with unhosted wallets. Because unhosted wallets are effectively just addresses on a blockchain, it can be difficult to determine who really owns and controls them, creating opportunities to abuse this heightened anonymity. Fundamentally, financial institutions need to know who they're transacting and doing business with to make sure they're not making payments to criminals, sanctioned entities, and other illicit actors. When it comes to unhosted wallets, we're working to provide them the information they need to avoid facilitating these kinds of illicit payments. Let me close by reiterating our hope that digital asset businesses like those represented here today share our concerns and can work together to address them. We look forward to working with you to build a regulatory architecture that protects the financial system from illicit activity while providing you the support and room you need to continue to innovate. America's international position and ability to safeguard our national security rests in no small part on our global financial leadership. We in government know, as you do, that the future of global financial system is increasingly digital. Our goal is to ensure that that system is not only safe and secure, but that it also benefits from the innovation of the companies that depend on our regulatory framework. We look forward to using our tools in concert with yours to preserve our role in leading the international financial system and building a financial system in the future that is more digital and more accessible to not only Americans, but those in need around the world. And I look forward to the conversation.
Awesome. Thank you. Thank you so much. So, Alan, maybe we can just get started with expanding on your last point. When you're talking about, using the tools that Treasury has to look at the digital asset sector, what are kind of the highest priority areas that, you've already started? We've seen announcements over the past year and a half. What are you looking at now? What do you see as highest priority? What tools are you looking at to address those?
So let me start out by just saying that I think that there are benefits to a regulatory architecture that creates the ability for people to innovate. That's not something that I only believe, but many of you who have come to see us at Treasury, to see our government, have called on us to think about how we regulate, and I think that is in the spirit with which we wrote the executive order. And the executive order, in many ways, is about us providing information about how we think about these issues in order to make sure that we facilitate an exchange with the industry and with innovators in this space. But we've made very clear that there's some areas where we know that we need to move relatively fast. For example, stablecoins, making sure that we work with Congress to adopt legislation there. I also think, from my perspective, spending a great deal of my time on national security issues, it's critical that we set up an architecture that allows you to understand what we want to do in terms of the travel rule and the unhosted wallet rule that creates the opportunity for those in this industry to innovate. One of the challenges that we have, not only in crypto, but also in the traditional financial sector, is how do we think about know your customer? And I think we need a lot of innovation in this space. This industry, the innovation that you come up with, my hope is that it will not only apply to digital assets, but we'll be able to apply it also to the traditional financial system to make those issues far easier for people going forward, because ultimately what we want to do is make sure that more people can participate not only in the digital asset space, but in the financial sector overall, because we think that is to everyone's benefit.
So, further unpacking that, on stablecoins in particular, we've all seen the President's Working Group report, and I know Treasury is working on reports related to that. Can you just provide an update? How are these reports looking? Are there any specific additional policy recommendations you think will come out of them, or what are you, what are you looking at just with stablecoins in general now?
Yeah, and I think the truth is that the President's Working Group laid out in lots of ways where we are in terms of stablecoins, and it went beyond just what Treasury was, but the President's Working Group reflected the views of regulators in this space, and it called for legislative action. And now we're engaged in conversations with members of Congress across parties, because we know this is a bipartisan issue, on what we can do here to provide a regulatory framework that protects financial stability. But also, as we think about the digital asset space, I think it's important for us to think not only about financial stability, but also about consumer and investor protections. How do we also think about national security? And how do we think about these things in a way that allows us to promote what I would call responsible innovation, and gives those people who are in this space the ability to innovate within a sense of this is the regulatory architecture that will govern here in the United States. And while we're focused on the United States, I recognize that one of the benefits of digital assets is they are global in nature. And we want to make sure that in the United States, we lead in thinking about these regulatory issues, but that in leading, we also bring the rest of the world along with us, so that you're facing a regulatory regime that looks similar around the world rather than differentiated.
And on that note, as you alluded to, Terra, UST, and Luna collapsed pretty dramatically last month. Are algorithmic stablecoins, which weren't really mentioned in the working group report, are those something that you'll now be taking a look at? Is that something that Treasury will publish more reports on, or recommend action on to prevent that from happening again?
Yeah, and I think the challenge that you have is when a stable coin isn't very stable, it leaves people with a great deal of concern. And ultimately, one of the things that is true of digital assets, that's true of fiat currency, is that trust is a major part of this. And you want to be in a position where people understand the products that they are dealing with. And my view is that ultimately that's why we think legislation in this area is needed, in order to give regulators the authorities they need for stable coins at large. But I do think you have to look at algorithmic stable coins and think through what kind of special disclosures, if any, need to be provided there. And from my standpoint, one of the most important things we can do for consumers and investors is make sure that they understand the products that they are dealing with, not only in the digital asset space, but in all spaces. Providing them with information that allows them to make better choices is going to be critical here. And I think that the reality is that people need to understand where they're putting their money and what's backing it, frankly, going forward.
Right. So let's switch gears a bit, Hag. Take a sharp turn. One of your remits is national security, as you mentioned, and over the last year and a half, the Treasury Department has sanctioned crypto exchanges. Conversation about sanctions and crypto as a tool of evasion has come up repeatedly after Russia invaded Ukraine. What are you looking at? What's kind of top of mind as you look at crypto and how it's being used in kind of these more illicit actions?
Yeah, and I think my view is that one of the things that we're committed to doing is building a regulatory architecture, but also going after those bad actors that make the space look bad. And we're going to do that using our sanctions tool. But to my point earlier, I do think that one of the things the industry needs to think through, how do you make sure that you're self-policing in some ways? That you, if you know that this actor is doing illicit behavior, you're making sure that they are shut off from the rest of the system is going to be critical to that thing that I talked about earlier, which is establishing and maintaining trust, not only with the people who conduct business with you, but also with the regulatory community. So I think from my standpoint, the places where I'm focused at the moment is how can Russia evade the sanctions that we've put in place to constrain the resources that they're using to prop up their economy or to further develop their war machine. We have not seen that crypto has been a main avenue of evasion, but where we do see it, we're going to go after it. And we've done that when it's come to criminal enterprises. But it's also important to point out that when the invasion started, one of the things that Ukraine called for right away was for people to send money to Ukraine. And some of those payments were facilitated using crypto. So I think you've got to be able to keep both of these things in mind, that in lots of ways, digital assets provide us with real opportunities here to advance things like financial inclusion, if done well, with the right protections for consumers and looking at illicit finance. But we do need to make sure that we're also mindful of the fact that, like any new technology, criminals and those who are looking to evade the traditional financial system are going to want to use it. And we're going to do what we can in government to use our tools to create the right regulations and to hold people accountable. But it's going to be critical that the industry do this as well.
And to that point, do you see the AML KYC regime? You mentioned the VAT of travel rule. That's been discussed for, I think, almost 3 years now, or maybe 4 at this point. Do you see these implementations happening at a rate that prevents this kind of illicit activity?
Yeah, and my goal when I think about the travel rule and we think about unhosted wallets is really to create the kind of architecture that gives the industry the ability to innovate to help us solve some of these challenges. Ultimately, I know there is a great deal of innovation going on in terms of how do we make sure that we give people the ability to maintain privacy, but ultimately we also are in a place where we don't allow illicit financial flows to occur and that for people to take advantage of the system. I think these are the type of things that we need to have the industry work on solving. And we think that by creating the right regulatory architecture that allows for innovation, but promotes the type of transparency that is needed to prevent illicit finance is going to be critical to this. And the thing that we want to do is be in open dialogue with responsible players in the industry on how we do this. You're right that this has been talked about for many years. And the truth is that if we had published a rule 3 years ago, it would have addressed the industry. It would be so different than the industry was so different 3 years ago than it is today. And 3 years from now, the industry will be different. So how do we create an architecture that gives you space to innovate, but to do it in a responsible way? The thing that we want to do is and the thing that we know we need to do is the only way that we can stop illicit actors from operating in this space or any other space is to do it in partnership with investors and with innovators, and making sure that the responsible actors in this space are the partners of government rather than working in opposition to us or feeling as if our rules don't give you the room to innovate in a way that helps to solve these problems.
And so to that end, you also mentioned the unhosted wallet rule earlier. Is that something, I know that was kind of put on the back burner at the beginning of 2021. Is that something you're seeing as, a rule that the U.S. will actually look to implement, or is that just more kind of like a framework that you're looking at for potential, future rulemaking?
Yeah, and I'm not going to get ahead of our rulemaking process, but I do think that one of the things that we're focused on is how do we address the challenges that unhosted wallets create for national security and for illicit finance? I understand and respect the need for and the desire for privacy, but we need to make sure that we're also in a place where we're not creating avenues where those who want to move funds illicitly are able to use digital assets more than traditional assets. We know that criminals and those who are looking to move funds illicitly don't only use digital assets, they use traditional assets as well. The thing we don't want to do is create an advantage for them to move into the digital space. That's not to your advantage, and it's not to our advantage. That's why we think that thinking about the travel rule and the unhosted wallet rule makes sense, but we want to do it in a way that addresses the fact that the thing we know that the way we solve these challenges, the way we address them, is by innovation and like making sure that we give you the room to innovate within a regulatory architecture that allows us to protect our national security, consumers and investors, and financial stability.
So, kind of maybe broadening this conversation a little bit. How is Treasury interacting with regulators and policymakers in the European Union, in Japan, China, all these other countries that are, as you said yourself, this is a global kind of system, and a single country's rules might not be able to really have an impact. What are these conversations like? How interested are your counterparts in these other countries in also addressing the same concerns you've laid out?
It's a great question. I think from my perspective, it's one of the most important questions is how do we build regulatory coherence across the globe rather than just in the United States. And what I can say is that this is a major topic of conversation amongst regulators in an institution called the Financial Action Task Force, where we're spending a great deal of time talking about how we can think about some of the things we're thinking about doing here domestically in terms of rulemaking, especially on the illicit finance side, and thinking about what it looks like for us to think about a global effort to address these challenges. We know that we want to ensure that America is a place where we create the ability to innovate, but one of the benefits of America is that we often create some of the world's best global companies. So we want to make sure that we're creating the type of architecture that will work here, but also will be shared around the world. And we're having those conversations with our closest allies, but also with all countries around the world through some of these regulatory bodies.
So, throwing a curveball in here, this is not something we discussed beforehand, but just thought of it. The tax question has been kind of a growing one. I know Treasury is working on kind of agreeing to or trying to get countries around the world to agree to some common standards around taxation. Are digital assets in this conversation? I know in the U.S. many concerns about specifics of how crypto is taxed. What's the thought process, if you're able to say?
So I can tell you domestically, it's definitely an issue that we're thinking about, we're working through, especially given the legislation that was recently passed by Congress. And my view is that, again, for those who in this space are responsible actors, who are innovators, it is going to be important that we work together to ensure that people aren't able to use digital assets to avoid taxation. The last thing that we want to end up with is a system in which regulators, the American people, and people in general think that the product that you're creating that could help solve a number of challenges, help reduce frictions for consumers, is being used predominantly for illicit behavior, be it funding criminal enterprises or avoiding taxation. So we are focused on making sure that we create the type of regulatory environment on the tax side that is similar to what we're thinking about from a principle standpoint, to what we're thinking about in terms of other regulations, which is we want to create regulations that allow people, that require people to do what they have to do with fiat currency, which is pay the taxes that they owe to the government. And ultimately, all of these things are going to require us to coordinate closely with our allies and partners around the world.
So I know Treasury is obviously working on policy recommendations around stablecoins, but a lot of the conversation that I've been hearing, at least from the folks I interact with, is there's this kind of like this growing question of whether existing laws make sense for addressing digital assets, and so that's taxes, as we just mentioned, KYC, AML, but also even some of the independent agencies and how they're approaching it. I'm just curious, what are your thoughts? Does it make more sense to try and come up with a from the ground brand new regulatory regime? Are the existing rules sufficient, or do they just need like a little tweaking?
Yeah, and I think it's both, honestly. You're going to need, in some places, additional legislation because when you envision some of the rulemakings, no one thought about digital assets. But in other places, we're going to be able to, if we're innovative and meet the innovation of industry, be able to find ways to bring digital assets into the regulatory regime that already exists. And I think this is like when we think about the travel rule, we think this is a place where we have the tools to be able to think through a regulatory regime that makes sense. And then I think you're right that all of the regulators are going through this conversation internally in terms of how do we think about our regulatory regime and how it applies to digital assets. And there you may also see them take some regulatory steps, but also over time you may also think about what additional regulation is going to be needed. And what I know to be true is something you all know far better than me, is that the digital asset landscape that exists today is not going to be the same one that exists 2 years from now, 3 years from now, 5 years from now. I think the thing as regulators that we need to be able to do, and policymakers we need to be able to do, is to think through how we build a regulatory architecture that is flexible enough to create opportunities for that innovation in a way that is responsible and gives people confidence that being engaged in this space is something that is happening within the rules of the road that people expect. We think that there are tools we have at Treasury and among the regulatory agencies to do some of that across the 4 areas that I laid out in my speech, but that we're also going to have to work with Congress. And I think one of the things that I am heartened about is much of the legislation that is taking place in Congress today, there is a bipartisan conversation. And I think that if we can do this in a bipartisan way going forward, it gives far more certainty in terms of the future.
Gotcha. So, bit of maybe a personal question, but are there any ideas, tools, or projects in this sector that you're really paying attention to that have your interest on a personal level?
Yeah, and I think that the thing I'm paying attention to in this space is the same thing I'm paying attention to across the financial sector in general, is what can we do in terms of financial inclusion? It's a major issue for me, not only internationally. I mentioned Afghanistan, but you even think about here in the United States, there are so many places where you don't have access to finance, and I think the question is, how do we make the payment system more efficient and effective going forward? I think the key is going to be, how do we ensure that as more people participate, you have the right types of consumer protections in place and you have the right types of transparency, but ultimately you want to be able to provide remittances at far lower cost to people. I know that there are communities all over this country where people are sending money back to families in other countries, and they are being charged a great deal of money to do that. What we can do to reduce the frictions and the cost in that space, I think, is critical. And it's also critical in our country to think through how we can use digital assets to reduce the cost of transacting here. So those are the things that I'm paying the most attention to.
Awesome. Yeah, it's a very important cause for sure. Unfortunately, we are out of time, but I want to thank you again for joining us. I really appreciate it. And I think this is where we turn it back to Michael Casey. But thanks
for
so much,
having me.
Deputy Treasury Secretary